Peter Rose, Longwood Currency Trading. Increasing your position size is going to require you to stage your lots. That's what we want to chat about today. And it is a beautiful day. It's getting on mid-May of 2022. And you can see here we've got a lot of blooming going on. Sue's flower gardens here haven't quite started to go yet, but the daffodils are going crazy. And so that's nice. And so is the trading. That's going pretty good. However, in a recent video, I discussed a process or a series of trades where I've increased the size of my positions by 40%. That's a big jump. Now, I increased the size of my overall bank considerably, like double. But the position size, I only increased to 40%. So what I'm finding, and this is, I've discussed this before, you know, I think as a beginner, if you can't be successful trading one mini lot on $1,000 position size, you're not going to be able to trade. If you can't make $5 a day, almost every day, consistently, after, I don't know, doing a couple of hundred trades, you save your money and go somewhere else, and take up, I don't know what you're going to take up, but don't do currency trading. But once you get that ability, and $5 a day is 0.5%. What do you want to do? Get 1% or 10% a day trading? I mean, let's be realistic here. When you shoot for the larger percentage gains, regardless of the bank size, you're looking for more pips. I mean, that's the only way you're going to be able to do it, and that screws up everything. I mean, if you want to be a long-term position trader, great. Don't try for a $10,000 trade series. Look at what's reasonable. What could you make on a daily basis if you were a day trader, and then say, okay, I'm going to make that 3 days a week, and what does that total out 10 weeks from now or 6 months from now, where I'm going to hold this long-term position? If you're making $300 a day, 3 days a week, you know, you're, say, $1,000 $1,000 a week that you're making. Okay, so you're going to hold the trade for 10 weeks. Okay, but maybe you know, maybe you have a $10,000 profit target that you're going to go for. And if you're trading on size, you don't want to have to say, well, now instead of making 10 pips a day or 15 pips a day, I get that 1,000 by going to 20 or 25 or 30 pips a day. Again, remember, we're hampered by the law of large numbers, but that's also to our strength, right? And so the law of large numbers simply says, over the long run, you'll make $300 a day. But there's some days you're going to lose $1,000, and there's some days you're going to make $2,000. And on the average, you make $300 a day when you trade. So you have to look at this stuff. I have to keep my eyeball out. I've got Bo out here somewhere, and the mailman's coming, and Bo doesn't like the mailman, and he's going to go tear ass after him. So when you're doing day trading, your averaging isn't as important as the longer term trading, because you're in and out 2 or 3 trades for the day, and you're flat at the end of the day. But once you increase your size, you're not going to move the market. If you had $1 million account and go in with 100 lots, you're not going to move the needle on the currency market unless you're trading exotic cross pairs at midnight. Yeah, it's not. So let's say you do this the right way. You start out trading in a mini lot, then maybe you go to a full, and you trade that, and you're able to replicate what you're doing at the mini lot level at the full lot level, and that's easy to do. So if you're making $5 a day, it's easy to go to $50 a day by going from trading one mini lot on a $1,000 bank to one full lot at $10 a pip on a $10,000 account. And it's not that hard to cobble together $10,000. And you know, if your margin is low, maybe you only need $4,000 or $8,000. Now, I just think to be safe and to be sure you're not over leveraging your account, $10,000 to trade one full lot, and that's just the way it goes. And Bo is wandering up this way. But going from a $10,000 account to even a $30,000 account, is problematic because it's very difficult not to switch your focus from the pips and the percent return and instead look at the dollars. When you see yourself losing $300 after you've been trading on say a 3 full lot, you make 10 pips, you make $300. And you've been trading 3 minis or 1 full, and 10 pips is $100. And now you're setting a risk and you lose $300. It's very difficult not to look at that and say, right? Come on. And so when you increase your size, you've got to be really careful. Increasing your size and trading with the same methodology that you were using when you were establishing your win-to-loss ratio and all those other really important metrics that you need to have before you increase your size. You're basically, when you're trading a full lot or 3 minis or something like that, you're not staging. You're just going all in and going all out, because you have to learn your craft. You have to learn what a good entry is. As you increase your size, though, let's say you're trading a $100,000 account. So each pip is you're trading 10 full lots. So each pip's $100. And so if you had a stop of 20 pips, that's $2,000. So it behooves you at that point, instead of losing $2,000, because you could have been trading a $30,000 account and making $200 or $300 a day, or $100 a day on a $30,000 account. It took you 6 months to make $2,000, or 2 months, or whatever it is, and then one stop loss, it's gone. So just because you have more money doesn't necessarily indicate that you can automatically step up your game at that level. Oh, I'm going to trade one mini lot, and then I'm going to trade one full lot, and I'm going to do that the same way. That's good. Once you go to around 30,000, that's not so good, particularly when you're first making that transition. If I were you, I'd leave the full amount of your bank alone. Let's say you had a $30,000 account. You went from 10,000 to 30,000. I wouldn't trade the 30 right away. I'd continue to trade the 10 and make sure that just because I know I've got $20,000 more available to me, doesn't mean I'm going to play that game until I'm used to having it in the bank. You know, I taught karate for 50 years, and some of it, we didn't do a lot of weapons, because a weapon, I feel, is an extension of the body. But we all become skilled in different weapons. I mean, I have a black belt in using the cane as well. I started studying the cane back in 2007. That was my weapon of choice. But I've done nunchakos, bow, shurikens, chains. I've done all that stuff. Gun. But one of the things that we teach when we teach weapons is always carry the weapon with you. So even though I initially started to learn the cane self-defense and fighting, when I found out that I was going to have my right hip replaced, I had arthritis in my right hip, and so 2007. So yeah, 3 years later, after I'd been working with the cane for 3 years and was a black belt in it, I had my hip replaced, and I knew how to deal with the cane and use it. Well, what happens 5 years after or 3 years after the operation? I don't need the cane anymore, but I always carried it with me everywhere I went. I took the cane with me. Some people say, well, don't you feel stupid walking around with a cane? I go, no, I don't even know I have the cane. It's invisible to me. And by being invisible to me, it means that when I was faced with somebody getting in my face or something, I wasn't thinking about the cane. Oh, I'm going to be able to use the cane or whatever. I just, don't just leave me alone. I'm just going to go somewhere else. And it never crossed my mind that I had the cane, but it was ready to go if it was ever needed. So anytime you're trying to become experienced with something, you always continue to use that thing and to have it so that it becomes just background to you. And so your trading bank has to be that way too. You don't want to go into trading 3 full lots after trading the 1 lot, right away without having the use of that $30,000 in your bank. I got $30,000 in my bank, but I'm exercising control by only using 10,000 of that. And that bank, you just call that dry powder. And you don't look at that as, oh, I could have made $300, but I only made $100 because I only traded 10,000 of the 30. That is the way you look at it. I made $100. I made $100. And I controlled myself, my urges, to slap that other 20,000 in there or buy two more full lots, because when it goes against you, now it's a $300 loss, and it chews up a couple of weeks of your trading, making $100 a day. When you take the step up to really big accounts, then you begin to use the power of staging. You're using the same theory that you're doing, but you become comfortable with where your profit target distance is. Let's say my profit target distance is 20 pips, 30 pips, something like that. Because that's what I say. I never take a trade, even when I was trading mini lots, unless there's 20 pips available to me. And then if it didn't go all the way, I'd grab 5 pips or I'd grab 8 pips. If you can grab 5 pips and do that consistently, you can make a lot of money. There's a lot of guys out there that are teaching and talking about currency trading. Say, all you got to do is make 10 pips a day. Hey, sometimes it's really tough to make that 10 pips. But you can usually always get 5, even if the trade goes against you a little bit, because all you're looking for is 5. That's why sometimes on the smaller trades that I do with maybe 3 lots or something like that, I'll let it go 20 or 30 pips against me, because it doesn't matter. Because when it goes in the direction that I'm going in and I make the 5 pips, all I got to do is 5 pips, and I make the money that I need to make. When you are trading with a lot of size, you don't want to have a 30 pip 10 lot price meandering around on you, right? Because that's $3,000 that you're down. And so when the thought and the theory of trading in that manner is that I still have to keep watching for Bo, because yeah, it's just mailman's coming. He's coming. I'm gonna wind this up here pretty soon. But the thrust of the thing is that when you go in with weight, you might go in with 2 lots, and if it hits a 5 pip profit, you bring your stop up, because then you're at break even and you're at 5 pips, and if it falls back against you, you're out. Why leave your stop there? Just get out. So the issue then becomes, I've got 10 lots available to me. I just dropped in 2 to open the trade. When it gets to 5 pips, I bring the stop up. When it gets to 8 or 10 pips, I'll go in with another 2 lots. And maybe I'll do that every 5 pips as I go up. And in fact, the further up that you go, the less that you want to add to it, because you want your average price per trade to be lower than if you were stacking, pyramiding up. Yeah, I'm not going to go into detail with it because it's a pretty complex course or a consulting thing that I work with folks on, because it varies from person to person. It varies with the situation, and it inordinately varies with the price action that's going on at that particular time. But the idea is that when you start trading with size, you need to start staging. That's the thrust of the video. Now, you could say, well, if that's what I got to do, then why can't I do that with one mini lot? You can't do it with one mini lot because then you're trading micro lots, and that's just, you're wasting your time. Well, I could do it if I had 3 mini lots. I could go in with one and stage another one. If you're trading mini lots, then you don't have the experience to stage. You don't have the experience to compound. You don't have the experience to let that trade run against you because you're only trading with a third or a quarter of your total bank size. So that loss pales in comparison to what you're going to make when you start staging in the other lots as price goes in your favor. You're not just taking 5 pips after taking a 30 pip risk and getting out with a 5 pip win. There's mechanics on how you manage your trade. And that's the second phase of the life cycle of a currency position, right? You have entry analysis, you have position management, and you have exit methodology. And so in your position management phase, these are all the decisions that you're making, but they're very complicated as far as the staging process goes, because you don't want to go all in with your position. Now, this channel isn't meant for advanced traders to listen to all this stuff. Advanced traders would take a course, or they would be doing mentoring with me, because I'm talking at a different level. I'm happy to work with somebody who's just getting started in trading, but you're not going to pay me money to teach you, what a Fibonacci thing is, or how to size your bank. Or I'm going to give you a book. Here, read this. At free. That's just, this is what you got to do before I talk to you. And so the way that you get started doing this, and even if somebody comes to me and says, I got all this experience and I'm trading with a $30,000 or a $40,000 account, but I'm not having the success that I want to have. Great. Guess what's going to happen, Bob? You're going to go back to trading a mini lot. Yep. I don't care if you have $1 million. Man. And the people that I talk to sometimes that have a lot of money, they're going to argue with me. Oh, it's all right. I'm trading a $60,000 account. I'll do what you say, but just with a $60,000 account because I want to make some money. Well, I'm not going to teach you that. I'm not going to put my name on your trading so you can fail and lose $40,000 or $50,000 and blame me. Because if you're not going to do what I tell you to do, I don't want to work with you. It's the same thing that I spent 50 years in teaching karate. You come in the door and try to tell me how you want to learn, get out of my house. Everybody who came into my karate club, regardless of their position in society, regardless of their job, or how much money they had, or how much athletic background that they had in training, or prior karate experience, here's a broom, sweep the floor. We're starting right over. That's the martial art way. That's the way that I teach currency trading. Most people can't deal with that kind of discipline and organization because they just want the magic pill so they can retire on their $30,000 account. They can make retirement income on a $30,000 account. There's plenty of guys out there that are teaching that'll tell you you can do that. Go ahead and listen to them and don't bother me. All I'm saying here is that when you're beginning and before you have plenty of time with good metrics, win-to-loss ratio, average profit and your per trade expectation value. Once you have those three metrics really good with the single mini account, then you're going to jump to $10,000. You're going to trade a full. And it's still all in, all out. You're not going to stage mini lots. You're not ready for that yet. You're not going to be staging anything, I don't think, until you hit a $30,000 account. When you've got a $30,000 account, you need to learn how to stage. But guess what? At that point, because you know how to trade, teaching you how to stage correctly, we're not going to have all this weeping and gnashing of teeth and not wanting to follow the rules, because somebody who has traded with me follows the rules, or they don't learn from me. I cut them off because I don't have time. I do not have time to drag somebody across the finish line. Even when I was teaching karate, this is the way that you do it. If that's not what you want to do, get out of my house. I'll give you your money back, go home. I don't want to talk with you. That's just the way that it is. So I'm telling you, trade and get your skill levels down until you think you're ready to get into that $30,000 level account. And then you're probably going to want to start to think about staging. And it's simple at that point. You go in with a 1, you add a 1, and you add a 1. And then you're done. The neat thing about having a $100,000 or so account is you've got 10 of those that you can do, or you got 5 of those that you can do. You go in with 2, you go in next time with 3, you go in next time with 3, and you go in next time with 2. So that moves your average. It doesn't bring your average down too close to where the current price is, and then you can make your money. So you do this stuff in the correct order that it's necessary to learn and develop your skills, and you'll make a lot of money. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.